with our next guest. Let's bring in Jim O'Neill, former UK Treasury Minister, former chairman of Goldman Sachs Asset Management. Lord O'Neill, great to have you back. I just wonder whether or not the pound and gilts are the two most important numbers on your screen.
I can't resist in saying, Carl, to you that over 30 years, every day of my life focused on this stuff. The one thing I learned is they go up and they go down. Right now, to say anything with more confidence about the next twist, I think is pretty hard. I mean, the pound is really cheap. It's fallen a long way, but my God, UK policy seems to be a real mess. And given that it's about 5 weeks off to the next Bank of England rate meeting, in order to salvage the pound's decline, we will have to have, I think, something that's not happened since the bank became independent, which is an intermeeting move to raise rates. We had plenty of intermeeting moves to cut rates, but we've not had one to raise them. But the bank has been, even without the fiscal largesse we had on Friday announced, the bank has been lagging the Fed, as you know, and now it looks like that was an error. And certainly, if the Bank of England would have met the day after the new Chancellor announced his package Friday, I'm pretty sure the bank would have done at least 75, possibly 100. And that's right. What the markets have got priced in, what's needed to begin to rescue this mess.
Do you think it sounds like you think it's reflecting a policy error on the part of the new administration?
You know, it's a combination of audacity, intellectual ambition, cavalierness, and to be frank, also what seems to me like a lot of naivety. For them to be unaware of the circumstances in which they were unveiling that kind of size of package, I'm still sort of struggling to fully comprehend it 3 days later, despite having been more focused on it given my life these days than I expected to. It is amazing, and it suggests that there's a small group of quite young intellectual advisors that are driving these guys, because to not realize that the markets could do what they could do, which, let's not forget, Friday alone, I think, is the biggest single decline in the day after a UK budget ever. It's pretty astonishing.
Jim, it's Morgan. I mean, we could talk about the UK and the incredible moves we're seeing in the pound, but you can have that conversation the world over, especially where the dollar is concerned. The incredible strength of the dollar, is that sustainable here? Or as you do see more central banks move to play catch-up, could we see some of these dynamics change and I guess reverse in some of the directions where volatility is concerned?
I mean, to be honest with you, I've misread the last rise of the dollar. I didn't think we'd get to where we are, but obviously with the Fed getting even tougher and the dramatic repricing of the front end in the US, the foreign exchange market is simply following the message of the Fed. But linked to the spirit of your question, what I really get drawn to looking at it all this morning is we've seen a big decline in quite a few commodity prices the past few weeks. And the 5-year Michigan Inflation Expectation Survey is now seemingly established back below 3%. So it wouldn't want to be the time I first bought dollars here, that's for sure. But you know, trying to chase the bottom of the dollar has proved to be a very costly exercise on many occasions. Sorry, the top of the dollar. And it's proving to be so again here. But it's clearly dramatically overvalued. You've got a number of Asian central banks now deliberately trying to stop it. So some of the ingredients for a serious turn are beginning to appear. But that might also be indirectly why the pound's suffering even more, because traders might be thinking, well, we can't really short the dollar against the yen can't really go long dollar yen or against the renminbi anymore, so we have to try European currencies. But I'll tell you, I'm just glad I'm not in it every day anymore, because it would be pretty tricky, that's for sure.